Late there, was taking care of some pending issues. So today, very important topic today on rate lock management, right? Mitigating financial risks through effective rate lock strategies. So very important in today's very volatile environment, right? So let's get right into it. Now, as everyone knows, a rate lock, right, is an agreement between a borrower and a lender that allows the borrower to lock in the interest rate on a mortgage for a specified time period at the prevailing market rate and provides a borrower with protection against a rise in interest rates during the lock period. Very important during these very volatile times right now. Now, interest rate risk is the risk that the market interest rate will rise, which will cause a decline in the value of the instrument. Now, that's really more for secondary. And the pull-through rate is the number of our loan applications that are closed and funded by the lender versus the total number of submitted loan applications over a set period of time. So we really want to make sure that we close what we lock, right? Now, we all know what interest is, but what are the factors that affect interest rates? Well, Federal Reserve, right? Open market operations. We've seen it happening right now. Last couple of days, we're looking at inflation. Now, in the last couple of days, inflation risk went down. Some CPI numbers came out lower than expected. So the market has reacted positively and the rates have gone down. So today's a good day to lock, by the way. We've gone over this in other trainings on how what are the conditions that affect interest rates, right? So we all know we got to keep an eye on that 10-year, see where it's going, keep an eye on what the Fed has to say, so that we can have an idea and be able to consult our borrowers. So what are the challenges with rate lock management? This is really what I wanted to get into here. So market and interest rate volatility, that's what we want to control, right? Because what can happen if you do not lock that file in? Let's say you disclose the file at 7%. And the DTI was 49% on a conventional loan, and the borrower qualifies. But now all of a sudden you did not lock in the file as soon as the disclosures were signed and as soon as the file was registered onto the portal, which is when you can lock. You cannot lock the file in as soon as the loan application is taken because the file does not exist on the investor's portal. We have to wait till the file is disclosed. Intake registers the file on the portal, and then you can request your rate lock as soon as this is on non-delegated files, by the way. If it's a brokered file, you're going to be submitting and disclosing and all that kind of stuff. And you're going to request a rate lock yourself via the portal of the lender where you're submitting the loan. If it's non-delegated, you request the lock through Encompass, and our lock desk will go and process that rate lock request as soon as the loan exists on the portal of the investor, which is why some of you may get the email, your lock request has been denied because the customer hasn't signed the disclosures yet and intake has not completed the registration of the loan on the portal. So you got to wait till that file exists in the portal. But once it does, that's your green light that you can lock it in at that moment. You do not have to wait till the appraisal comes back a week or 2 weeks later to lock it in. Because, with the amount of volatility that we're having right now in the market, if you wait one day, it could be too late, right? So if it's ready now and the customer is happy with the rate right now is the time to lock it as soon as the file is registered. Because again, what are the risks? Well, if the interest rate goes up, let's say that 7% rate is now 7.25 or 7.375. Now the DTI goes up. There could be then an issue where the borrower may no longer qualify at the higher interest rate, and you could have an issue. And now another factor to lock in the rate is the loan does not just have to do with the interest rate, but it has to do with the guidelines. Guidelines tend to change. And if once you lock in a loan, you also lock in the guidelines for that product. So that if the guidelines should change, what happens every now and then, maybe they'll tell you the FICO score requirement now increased from a 660 to a 680 for a particular program, and your borrower has a 662, and you didn't lock it in, and now they require a 680. Now your borrower no longer qualifies for that program. Maybe you can fix it with a rapid rescore, with the borrower paying down some accounts, and then you, the MLO, paying for a rapid rescore, or maybe you have enough time to do that. But keep in mind what can happen. Also, besides guideline tightening, you could have a program be totally eliminated, where the only way that you could safeguard your borrower is to have locked in that loan, which would have locked in the program. So even if the program is eliminated, you're already locked in, and as long as the lock is active, they won't, they'll allow you to close under the program. So again, be aware of that. Now, another scenario, if the interest rate goes up, is that, let's say you can't do anything with the rescore. Now all of a sudden, borrower has to come in with more down payment, maybe because the LTV is lower and the borrower doesn't have the additional money to cover the additional down payment or the additional closing costs to qualify at the higher rate, and they may not be able to close. End result in any of these four scenarios is borrower becomes upset, cancels the loan, vows never to conduct business nor refer a loan to the MLO nor to the company. But main thing is that their purchase or their refi got damaged by the fact that the rate was not locked when it should have been. Remember, customers don't always know when the rate should be locked. That's up to you to have that discussion with the customer. And you should be having that discussion with the customer when the loan application is going to be disclosed. You want to explain to the customer, okay, you're going to sign the loan application. We're going to register the file on the investor's portal. Or do you want to lock it in right now at the rate that we have? Because they're seeing an application come by with a rate. They're probably expecting that's the interest rate they're going to get. Right? They may not understand about rate locks or any of that kind of stuff. So it's your job as a licensee to explain to them everything that is involved in the process of the loan application, including, because you've brought it all the way to locking the file. To disclosing the file. Why ruin it by not also explaining to them about protecting the interest rate that they think they're going to get with a rate lock? And my recommendation is don't lock it in for 30 days. I would probably lock it in for 45 days. It's usually only going to cost you an extra eighth of a point. Sometimes it's even the same cost. Don't risk it, because if you have to go get an extension to the rate lock, it's going to cost 2 to 3 times more to extend it for 15 days than it would have for you to get a 45-day lock instead of a 30-day lock when you initially lock it. Remember, things can happen that could delay the file. Plus, also, in some cases, depending on where the loan is being submitted, they require the rate lock to be valid through the uploading of the file on the investor portal after everybody signs in the closing. So if it's a mail away, for example, for the seller, and there's going to be a 2 or 3 day delay for the title company to get those signed documents back and uploading it to the portal of the investor, we need to have that rate lock valid through that extra time period. So there's a lot of factors here to consider, but the main one is communication with the customer as to locking in the rate. And my recommendation in this volatile environment that we're in is that you lock it in as soon as you're able to, and lock it in for 45 days. It's going to give you peace of mind because we have so much volatility. The last thing you want to do is lose a loan because now the interest rate is not where the borrower wants it to be. So again, I guess I got a little bit ahead of myself here in terms of the strategies for effective rate lock management. But like I was stating before, early in the process, before the loan is disclosed, communicate to the borrower the need to lock the rate and confirm when the borrower decides to lock the rate. I mentioned there about locking it for 45 days, not 30. And please make sure that the credit and income and property type is properly analyzed prior to requesting the rate lock to ensure that the loan is going to close. I mean, typically, when we disclose a file, it's already been checked by with your mentors, and we've analyzed the structure, and it's usually good. But just make sure that there aren't any issues, unforeseen issues that could affect the loan closing. Very important also, manage the borrower expectations throughout the process, right? Explain to them how everything works, like I mentioned, so that they, because they're going to assume one thing, and unless you explain to them and manage the expectations, then it's going to give you could result in a headache. Let's just put it that way. And what are then, lastly, the benefits of effective rate lock management? You see there the happy loan officer, right? Well, you're going to minimize the interest rate risk because you're going to lock in the loan. And interest rate risk is also the risk of, not having the program available for when they want it. So that's all pretty important. You're going to provide certainty to the borrower and being able to properly plan the finances for the transaction, right? They know that what their payment is going to be. They're counting on that 7% interest rate, if that's what it is. And the last thing they want is at the last minute to be told it's going to be 7.5%. And even if they qualify, now their payment's higher. It may not fit into their budget, even though they qualified, right? If it's an investor, especially, we're going to help their profitability by enhancing the financial stability. And for the MLO, a lot of benefits here, right? You're going to have higher earnings due to less deals falling apart due to rate lock issues. You're going to have higher earnings due to increased referrals from satisfied customers. You're going to be spending more time on production and closing and less time dealing with borrower issues and complaints. And you're going to have a more positive business outlook from increased satisfaction of being a successful loan consultant. So the takeaway from this presentation, the most important one I would state, is that the best time to lock in the file is when the customer wants to lock it in and when they expect it to be, or when they expect it to be locked in. That's what I'm saying. Don't assume anything. Communicate with the customer the need to how it works, what's the procedures for a rate lock. Ask them if they want to lock it in as soon as the loan is disclosed. They're probably going to say yes. Explain to them that you're going to lock it in for 45 days. It doesn't matter that you quoted them a 30-day rate. Lock it in for 45 days and explain to them the benefit of the extra 15 days in the whole process. And just, like I said, make sure that you're properly managing the expectations. Do not wait. Don't think you have to wait for the rate lock request for the appraisal to come back. You don't. That file can be locked in if it's non-del. As soon as it's disclosed and it's registered onto the intake is completed. If it's non-del and if it's brokered, as soon as you go onto the lender's portal and you upload it there, then you can lock it in. It works the same both ways. The file has to exist in a lender or investor portal to be able to lock. So don't wait until it's too late to lock in the file, and then all of a sudden have an interest rate 0.5% higher or even worse than what was originally estimated. So are there any questions regarding rate locks, when anyone should think we should rate lock? What do we think about the interest rates? Where do we think they're going to go? Any kind of questions like that would be, we can go ahead and answer that, because this should be a hot topic for everybody, right? Rate locks are, interest rates, again, are very, very, very volatile, and you should really be locking in those rates as soon as you can, right, on the non-delta. Okay, so we got Jackie with a question. All right. So she states here, you mentioned about a rate increase. What if, to the benefit of the client, the rate goes down? How is that handled within the rate lock period? Okay, that's a good question. So I'm assuming you mean if the interest rate is already locked, is there any option if the rates go down to lower the rate, to change the rate lock? Well, that there is in some cases. That's called a float down, right? The float down is where they basically let you bring the rate down on a file that's already locked. So what we're talking about here is that the float down policy is not necessarily available in every investor or every lender. It varies from investor to investor and from lender to lender. By investor, I'm talking about the companies we sell a loan to if it's non-del, and by lender, we're talking about on a brokered file, the lender you're submitting the file to. Some have a float down policy that states if the cost of the rate goes down by 1 point, you can float it down, and then they're going to charge like 0.5 point, but you get a lower rate. So the benefit then would be 0.5 point benefit to the customer, and then that 0.5 point gets applied to the rate, and the rate's going to go down. That's called a float down, right? But that's not possible in every scenario, right? So do be aware when you do have a file submitted, if rates go down and the file's already locked, let us know, and we can reach out to the investor and find out what's the float down policy. But it's usually going to be something like that. The rate has to improve enough so that the cost of the rate gets better. So let's say the cost of the rate decreases by 1 point, for example. I know one in particular where the cost has to decrease by a point on the same rate, and then they'll charge 0.5 point. So they'll give you the new better pricing of 0.5 point, and then that can be applied to the rate, and the rate can be brought down whatever that 0.5 point gets you, or more. If it's more than 1 point drop in the cost, they're only going to charge that 0.5 point, and the difference in the cost goes to the borrower to apply to the rate to try to get a lower interest rate. And so remember, that's a float down. Very good question, Jackie. And then Amy wants to know who pays for the rate lock and how. Okay, well, the rate lock does not, we don't charge an upfront rate lock fee. Some lenders, some investors charge the borrower a rate lock fee. We don't do that. The rate is just locked. We request a lock, we lock it in, and that's basically it. Now, what happens is if the rate expires or is going to expire, we extend it. There is a rate lock extension fee that gets added to the cost of the rate. That's not a fee the customer pays during the process. That just gets added to the cost on the rate, and then we redisclose the extra cost for the rate lock extension. So a couple good questions there. Any other questions on interest rates, where we think they're going to go, anything on the process? I mean, right now, again, there's a lot of volatility in the market. It's hard to tell. I mean, everything is basically in the short term, right? We're dealing with short term situations here right now. Always looking forward to the next report from the Fed, the next inflation report, the CPI, PPI, and all these other reports that go out. So, all you can do is monitor the activity on the economy to be able to consult your borrowers. But the key, I would state, is that once you have that application and it's going to get disclosed, that's the moment to discuss with the customer. And if that's the rate that you're disclosing and that's the one that they want, lock it in as soon as you can. Do not wait. Okay, we got another question here. Do rate locks get processed with senior management? Well, when you request a rate lock through through Encompass, right? Which is our loan origination soft system. That request goes to our lock desk. Then our lock desk then goes to the portal where the loan is registered and requests the rate lock from the investor. And then once the rate lock is processed by the investor, you get a confirmation email that the rate lock has been processed and completed, and that a change of circumstance needs to go out to the borrower for the rate lock, for the confirmation. Usually, it's the same cost, but sometimes it's a little bit of a higher cost. So yeah, we definitely need to always redisclose rate locks because remember, any change in circumstance has to be redisclosed within 3 days. So if that rate lock is not redisclosed within 3 days, your file will be out of compliance and it risks not being able to close, especially if the costs went up. It definitely risks not being able to close for not having redisclosed the rate lock. Good questions today. All right, so I'll give it a moment to see if we have any more questions. A very important topic today, rate lock management. And again, I can't stress any more than to state the best time to lock the rate is as soon as the file is disclosed and intake is completed, so you can make sure that the customer gets the rate that they saw on that application, right? I mean, you send them a quote, they're like, yeah, that's the one I want. And that's the one that they're going to see on the loan estimate on the initial loan estimate that they're signing. The last thing they want is to get a loan estimate when it gets locked in at a higher interest rate, especially if you haven't discussed it with them. And especially if they were not the ones to tell you to hold off, don't lock it in yet. I mean, I had a customer told me a couple of weeks ago, no, don't lock it in yet. I'm like, are you sure you don't want to lock it in? And by the way, this was all via email. And finally, the customer was like, no, don't lock it in. I think it's going to get better. And instead, it's gotten worse. So I'll be reaching out to him today at some point to see what they want to do, because we had a little dip the last couple of days. So this may be a good moment to take advantage of this little dip. All right, good questions today. I'll give it another minute to see if anyone has any additional questions on rate locks or rate lock management or interest rates in general. But I do appreciate all of you being in today's training. Very, very important training. We don't want to lose a loan after working so hard to get the loan because we did not lock the loan in. All right, everyone. I think that's probably it for the questions. I do appreciate you all being here, and I will see you next Thursday. Have a good day.